Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the Forex Daily Video Research. It's provided by the ForexPeaceArmy.com, technical analysis of the Forex market. Well, today we will talk about the New Zealand dollar because I decided to dedicate this research to this pair because we didn't talk about it for a long time. Besides, we talked much about the Great British Pound, about the Euro, about the Australian dollar. So the time has come to take a look at the New Zealand dollar. By the way, it has some very interesting patterns that could be traded during the coming week. Also, I suggest and strongly recommend you to read the text form of weekly research that I placed on the ForexPeaceArmy.com, because the greater time frames such as monthly and weekly time frame contain the very important context for the possible trade on the coming week if you are trading much the New Zealand dollar. So we will talk, this is the daily research, so we will talk only about the daily and intraday charts. We will start from the daily time frame. Well, a lot of stuff here, so let's go step by step through it. First of all, the red line on the chart, the MACD predictor indicator, shows us the trend. When the market above the red line, trend is bullish. When it's below it, trend is bearish. But on Friday we have the very important and interesting price action. Look at this. In the beginning on Friday, market has moved below the red line, shifting trend to the bearish. And some people who have took this signal and enter on the short side of the market has been trapped in the wrong positions, because at the end of the day, after the non-farm payrolls have been released, market has cancelled this trend shifting and closed above the red line, confirmed the trend remains bullish. So daily trend remains bullish. When the people entered on the short side of the market, they place stops somewhere above the market. Very often they place stops just above the previous highs. It's right here. So this pattern suggests that, and very often leads to taking out the previous extremes. In our case, this is the previous highs. It's right here. Also, take a look at this pattern, A, B, C bottom. 618 expansion target from this ABC bottom swing is just above the previous highs. It's around 78.06. That is very coincide with the possible target of this pattern. So if this pattern will work, this target should be reached around 78.10 roughly. Area should be reached. Besides, stops that has been placed just above this area has been placed in most unwelcome area, because the logical profit objective, the Fibonacci expansion, is just above the high, and it means that with a great probability we can say that this high will not hold, because 618 expansion is just above it. If it will be below it, then we possibly can say that yes, possibly this high could hold. But in this case, the probability is even smaller that despite even this pattern, that this highs should hold. So this is the possible context for the coming week, that market can take out these previous highs due to this pattern, if I will repeat, if this pattern will work. Also, take a look at these colored lines. This is weekly pivot support one for the coming week, around 74.68, weekly pivot point 76.06, and weekly pivot resistance one 77.03. Just for information, I use the futures chart. So guys, your numbers, if you use the spot forex, will be about the 30 pips higher than mine. So my close is about 75.65 the previous week. Your close about 75.93, somewhere around this area. Okay, so take it in mind for the calculation of the possible levels. I just show you what levels to watch for, and you can calculate it by yourself. to estimate the numbers with more precise. Okay, this is the daily time frame and the pattern. Now let's take a look at another view of the daily time frame. For the resistance areas, you can see that the first Fibonacci resistance 3.8 resistance from this high to this low coincides with the weekly pivot point, and the next one is 76.72, 618 resistance from this high to this low. It's just above the market. Now shifting to the 4-hour chart. On the 4-hour chart, first of all, we see the excellent example of the double repo sell pattern, but this is a review mirror. I just want to show you how it looks like. We have the excellent thrust to the upside, close below the 3x3. This is green line 3 period, simple moving average shifted forward for 3 periods, close above it, and then close below. Okay, I think that's happening right here. Then we have the excellent thrust to the downside. Now what we can see right now, first of all, this is the Fibonacci area of support and weekly pivot support 1 for the previous week. I do not have it in this chart because it's not so important currently, but this will be a nice support. We couldn't call it like the double repo buy because although this thrust down is really perfect, there's too much consolidation on the market. We need very fast reaction from the market right here. For example, close below, close above, and close below. It's relatively fast move. But here we have the close above, consolidates, close below, then above, then again below. So this is not perfect pattern for the calling it double repo buy. Possibly we can call it this double repo lookalike due to this long-term consolidation, but not the perfect double repo buy. But in general, it still could work to the upside. But this is again not the perfect pattern. On the hourly chart, we can see a bit complicated picture. First of all, what we can see, market has accomplished 127.1618 expansion, butterfly, sell. Look at this pattern. Here it is. This pattern is completed. Market totally collapsed to the downside. Now another butterfly is possible to the downside. Butterfly buy from this swing, from AB swing. Okay. This could be also the butterfly. At the same time, there are a couple of moments that were important right here. First of all, look at this pattern: A, B, C, bottom. 100% expansion is precisely at hourly confluence resistance area. It's right here, and weekly pivot point, strong area of resistance and agreement. If market will reach this target, then this butterfly will be cancelled because AB swing will be destroyed by the new high that market could establish on this ABC bottom pattern. Now market has reached only 618 expansion from this AB move and turns to some retracement. The second important moment, look at this red line. This is the same MACD predictor indicator. It shows us the hourly trend, and here we can see the same pattern, MACD predictor failure, when the trend shifts to the bearish but hasn't been confirmed and turns to the bullish again. This pattern will also can lead to the previous highs around B point, and that should be taken out by the price. So market has a great probability of reaching at least 100% expansion target in this area. That's why I think that the recent butterfly has the more probability to be erased by this move to the upside than to work perfect. Okay, I think that this butterfly will be cancelled. Now what we should to do? First of all, that's been said that on the daily time frame we have the bullish pattern. On the hourly time frame we have the pattern that should lead at least to the area of the first resistance and weekly pivot point. Then we should watch how market will behave in this area. If market will fail there and show some strong move continuation to the downside, it means that possibly the daily MACD predictor pattern will fail, and there will be time to not establish any long position. If market will hold below the weekly pivot point and couldn't break it to the upside, then don't be long. Wait for possibility to end on the short side of the market. If it will happen, then the market can reach at least this target, at least 74.68 weekly pivot support 1 and Fibonacci support. This is the same daily chart. If market will move above this area and hold there above the weekly pivot point, then The next target, I suppose, will be 78.10. Just watch how market will respond in this area. This is how I will act on the beginning of the week, what personally I will watching for. Well, I think that on the Monday market should reach this area, 76.10 roughly. Then we should watch how market will respond in this area. If it will break to the upside, the next target is 78.10. If it will move below and trend shift bearish again, market will confirm bearish trend, and possibly this pattern will fail and market will reach at least weekly pivot support 1, 74.68, and that's also 74.68 Fibonacci support area from this low to this high.